All right. Good morning, and hope you had a good weekend. If you are in the Middle East, we're certainly praying for you and your families for your safety. Not something I personally wish upon anybody. I do thank the fractal gods for setting us up for this. Again, I say this all the time. I think this week is, by the way, free access week at Hedgeye, so I think we have a bunch of new people listening in. Welcome. We appreciate it. I say this all the time, but again, I know nothing about where I'm going to go with my hard-earned capital. I've been stacking the pile, I guess, to use the old laser-eyed saying, since, like, I don't know, 28 years now at this point, and I have no idea where I'm going with it. So if you're looking for certainty or Nostradamus or something like that, you should probably just go back to CNBC. I have no idea where it's going, but I know exactly how to get there. And the signaling process is the way. It got us long oil. It got us long energy stocks. This is after being bearish on oil and energy stocks for the better part of last year and going back to 2024. So again, I didn't know anything about what was going to happen in the Middle East, but the signal did. The signal, if you believe in AI, is much smarter than anyone that's listening to this call. And if you think you're smarter than that, then again, go listen to the real geniuses on CNBC once more. So we got that set up. S&P 500 is going to test for the first time a trend breakdown. This is, of course, just a part of a topping process, perhaps, again, with the current dynamics in the marketplace being the chop bucket in volatility, the VIX north of 19, if you're new to this, and or just a series of lower highs, which is not new. That's been happening for a week now in the S&P 500 risk range, which we publish daily, alongside many other risk ranges that you should need before you make a risk managed decision. All right, so you got lower highs in that. You get an immediate term trade breakdown in S&P 500 as of Friday, and trend is at 46 or 47.99. 47.99. Nasdaq already broke trade and trend. We're short tech, XLK, consumer discretionary, XLY, financials, XLF, etc. Lots of longs and shorts on the board, and quite happy with them actually. Bennett, good morning.
Hey, Keith. Good morning here. I wanted to touch on a move that we made up the short side. I'm elevating Wingstop, WING, to an active short on the basis of a first quarter to date same store sales run rate that's slowing and not aided by their initiative for smart kitchens. Two, street estimates that overcompensate the incrementality from loyalty in the second half of 26. And third, ad spend that continues to be too narrow, failing to attract new customers in the face of a pressured core consumer. Keith, I put out a note on this last night, so I won't dive into everything, especially with earnings and everything going on. And I won't call this a bubble that's going to potentially pop, but float in the wrong direction, especially after a first quarter comp that will be vastly negative. The street's anticipating an acceleration. I'm seeing anything but that. I think it sequentially gets worse. A further proof point that the smart kitchen is not fully offsetting these same store sales pressures. Keith, the smart kitchen is essentially, they cleaned up the kitchen and put in KDS, kitchen display systems, right? And they've talked about how getting to this 10-minute service time is important. Throughput, this is a back of house initiative. The brand is noted only 50%, it's in the full system, but only 50% of the units are running this 10-minute service time, and that delivery times are not matching that speed of service reduction. I think when you think about other drivers, so Smart Kitchen, we've put in some data that shows the regions with the most mature Smart Kitchens in the Southwest are not inflecting higher than the system. In addition to that, when you think about what this brand is doing with loyalty and ad spend, on the loyalty front, they already run 70% digital mix, and they run a heavy mix of activity through that channel already, right? So it questions the incrementality, especially when you consider, back half estimates for Wingstop from a comp perspective are in that mid single digit range. And then you have partnerships, right? This ad spend, which has been self-stated by the brand and by their partners. They partner with the NBA, right? And this overlaps with their core consumer, which may benefit re-engagement rates with negative comps, but will not broaden their offerings. Well, the nature of this franchise business will limit earnings volatility as the brand kind of navigates current pressures. I see this could re-rate lower. I see this as 24% downside on 2026 numbers, and that's all I have for you today.
All right, thank you. Wingstop, top five most actionable on the sell side. We have longs and shorts on the call. So again, this isn't some pump and dump show on Bloomberg or CNBC. This is again independent research. It's apolitical. We're trying to make money. If we don't save or make you money, you should cancel. Okay, long shorts. Not. I said that a couple times this morning. Maybe just again, just like know what you're getting into. If you want people to lie to you and pump to you, then go find that for free. That'll cost you a lot, quite a bit, actually, more than free. 95 longs. So we have this thing called the Signal Strength Long List that you can subscribe to. It's called Signal Strength Stocks. 95 longs on that list. 81 shorts. Wingstop is one of the 81 shorts. If you don't know what a short is, it's called something you sell. So if you own Wingstop or your granddad does, tell him to sell it. All right, go eat there. I don't care. Hopefully you get a deal. Thanks, Bennett. Appreciate it. Biolsi.
Morning, Keith. So as far as position monitor changes, we're adding JM Smucker, SJM, to the long bias list. I discussed this.
PB&J for the war.
Yeah, the Uncrustables. Really, it's the activists' involvement that sort of is the tipping point. I was talking to RPK about it. I just needed the weekend to think it through and sort of examine everything. But that we were already sort of leaning towards that ahead of CAGNY, and the biggest issue I had with management was capital allocation, and that's what the activist fixes.
Who's the activist?
Elliott.
Oh, Elliott. That's and this has been a tightly held, stock that's got a bunch of like self-interest over the years, right? So that's a big opportunity.
Yeah. And then, as far as the global events, I would just mention for my universe, very limited sort of direct impact, but the gasoline stations like Casey's General Stores and Murphy USA, I think, the signal was also showing even in their stocks what was about to happen, geopolitically. They like the volatility in gas prices, right? Because they're going to raise prices at the pump faster than their actual costs. So that's good for their margins. CASY, that's on the long list. And it's actually my number 2 long right now. So that signal sniffed it out too.
If you want somebody to rip you off at the pump, then go short their buy their stock if they're ripping more people off than understand, which is the case. All right. That it?
Yes.
Yeah, lots of names that on Bielsi's list. So, one of the big moves you should make in a quad 3 is to short or get out of financials, consumer discretionary. So, quad 3 is called, rate of change stagflation. If you don't want to do the rate of change part, just do stagflation. That means that when you go to the gas station, the prices go up. Therefore, you have less money when you get out of the car to go buy things inside the C-store. Okay, that's what stagflation is. And if you're on a budget, which 2/3 of Americans don't have the money that most of you do, and if you're on this call because you don't have any, we appreciate it that you're trying to get yourself out of that K-shaped hole that both Republicans and Democrats put you into through money printing and supporting the elites and all their insider trading. All right, so if you are part of the people, you understand when the cost of living goes up and the real growth goes down. That's the stagflation. Okay, that's the quad 3. So there are plenty of longs associated with that, from Hershey, HSY to McDonald's, from Bennett to Pepsi again, from Biolsi. Lots of names on that signal strength list that, by the way, are unaffected by the bags that many of you hold in the bag 7. Again, if you're long Nvidia now, okay, I wouldn't be. It's bearish trend on our signal, and maybe we'll get to that later on with Felix. All right, thank you, Jenks.
Hey, good morning, Keith. A lot going to be impacted in my space, obviously, due to the events in the Middle East. Fuel impacting, obviously, cruise and broader travel. I'll get to that in a second with respect to cruise, but we do have a couple more companies that are reporting earnings. So Norwegian Cruise Lines, NCLH, reported this morning inline quarter, which they had already pre-announced on the back of their CEO stepping down before Elliott essentially had put out their deck over the long weekend. That was 2 weeks ago. They are actually activists on this one. And just as a reminder, the results themselves, or at least I should say the guidance and the expectation for 2026, way worse than even my bear case could have expected or anticipated. This is the one cruise stock that we have not liked over the last number of months. Really, once we got through the summer, which was better than feared, And then the very well booked Q4 that they had on the docket, everything has gone sideways to south for this one. Pricing has been lagging peers. The only read through that I would say from the guidance that they put out is they suggested their premium and luxury brands have been pricing well above expected guidance. Essentially, that's the implication of what they're saying in the press release. That the implication then of that is everything else, essentially the Norwegian brand, which does compete with Royal and Carnival, is just an absolute disaster. For Q1, they're essentially going to have negative yield growth, and that's against a very, very easy compare. I speak on this more so for the coming days when perhaps fuel will be less of a marginal driver of stock performance, but I think there's far less of a read-through from Norwegian's fundamental performance. As we've seen over the last number of years, they've lagged while the rest of the industry continues to move in the right direction with respect to pricing integrity and discipline. I think the same is happening here. The benefit, if you want to look at it glass half full, I think there's plenty of other options in cruise if you want to look glass half full. But if you do, this does potentially accelerate Elliott's ability to affect change at the board level. Norwegian was set up for an absolute abysmal year. The CEO saw the writing on the wall and he said, "Yep, I'll take the exit." So he's now out of the picture. I think this does help Elliott get the necessary board seats, at least in the first half of this year. And then you have an interesting story at some point down the road, and that is not today, where you have a really easy comparison base due to management's issues and failure to execute and really understand the competitive dynamic out there. You do have that coming forward next year, and you do have some company-specific tailwinds that you will get later this year. But I wouldn't touch the stock with a 10-foot pole, especially on the pullback related to geopolitics and fuel move. You look at Viking and other ones, which could be interesting. Let's see how they trade today. Viking, as a reminder, does not consistently hedge fuel. However, they are the least exposed to fuel moves. When either you look at it as a percent of OPEX or a percent of revenues, it's a half to a third of the exposure relative to peers. It's just, the ships on the river are far more fuel efficient, and also much more of their ocean tonnage is newer class ships, which meaning they're a lot more fuel efficient than contemporary peers. That's it on the cruise side. There's going to be a lot of volatility, like you had said at the outset, Keith. We'll see where the week takes us. We'll have a playbook. We know how to get there. We just don't know where we're going. We do have Viking also reporting tomorrow, their Q4, and obviously they don't guide, but they will give us some perspective as to how bookings are tracking. So that's that on cruise. I just had one other thing to mention on Macau, because we did have numbers out over the weekend for February.
Yep.
Okay.
The plan is if the signals break, they'll be gone. That's pretty straightforward. Called stop losses for everyone who doesn't know, and I don't really care what anyone says about that. They're just tickers, all right?
Just tickers, absolutely. And then on Macau, February gross gaming revenue trends were a touch light relative to the pretty solid visitation trends. Remember, last week I had suggested that visitation was coming in solid, but let's see what the actual gaming revenues are going to do for the month. And indeed, visitation was up high single digits over the Chinese New Year, and that's obviously just capturing 8 to 9 days of the month. But I think indicative of what the month's going to do on the GGR side, gross gaming revenue side, only up 4%, which really is a big decel step back from the robust growth you had in January. I think the problem is from here is you have a market that is more promotional than what we thought 30, 45 days ago. And you have tough, steeper compares and the likelihood of deceleration. So the bull case that you did have, which was promotional intensity pulls back, a market share gainer, could be an interesting long. I think the space is just an avoid for me here, more neutral and building more of a negative case actually on Macau. But that is it for us today. Remaining earnings that we're wrapping up. We do have an analyst day for DraftKings as well, which I potentially will comment on tomorrow. And that is it for us today in the GLL world. Should be interesting.
All right, thank you. McGough?
Yeah, good morning. So we made a lot of changes on our idea list last night. One of the things that we did is we went short the department stores. So that's Dillard's, DDS, Macy's, M, and Kohl's, KSS. We had been short Kohl's, but we're pressing that one. Look, the department stores used to be consensus shorts like lazy shorts. Everyone's just short them because they're going away over time. I don't think that's true now. These stocks are up about 100% on a 12-month basis. The short interest is well off of the highs, and the stocks are just flat out expensive. And most importantly, Pod 1 is starting to go the wrong way. So I think that this group is really it's got a lot of torque in it, and I think it's geared to head lower as a group, all of them. My favorite short of them all is Dillard's DDS. It's got the signal on its side, and it's egregiously expensive. It trades at 12 times EBITDA, which is like 3 times Macy's multiple. And we just had our first quarter. We talked about this a week or two ago on the call. We had the first quarter where the company actually had down earnings on a year-on-year basis. So that earnings algorithm is starting to roll. One thing about Dillard's, there's always this narrative that gets thrown in there that the company is going to monetize its real estate because it owns most of its real estate. That is simply not possible. There have been activists who have tried this with Dillard's like 3 times over the past 10 years. There have been campaigns and nobody can get it done. The reality is there's simply not a liquid market for 600 mall-based, stores, anchor real estate. There's just no market that exists for it. What there is a market for is if the company wants to peel off like 1 or 2 stores at a time, that's perfectly fine, but that's not going to get this stock moving higher. That's what Macy's is doing, and Macy's trades at 4 times EBITDA, 5 times EBITDA. So I like Dillard's the best. Next is Kohl's. I won't speak much about that right now. We've talked about that a lot in the past, and the signal does not agree with the call on Kohl's right now, but Kohl's is going bankrupt. It's just a question of when. It's going to be a vendor-led bankruptcy where you're going to have guys like Nike who are going to pull out, turn a -5 comp into a -15 comp, and then this will unwind very, very quickly. It's going to be like Bed Bath & Beyond was when that went bankrupt. Like one day you started to get these whispers of vendors, starting to have a problem with the company's payments. So they restricted product flow. And once the product flow got restricted, like 3 weeks later, Bed Bath & Beyond went bankrupt. I think Kohl's is going to be the same way. I'm not convinced that it's going to make it through this upcoming holiday season. Not upcoming, but the one that we have in 9 months. And then lastly, Macy's look, people will look at Macy's and say, oh, it's cheap. It's really not cheap. I mean, Macy's is traded at 1.5 times EBITDA. It's now trading at 5 times EBITDA. Macy's is like the penultimate department store chain, and it's got a dying customer. It literally has a dying customer. Like its customers are dying. Like that's the problem with Macy's. And you don't have Gen Z who's increasingly going to Macy's to find their next outfit. The company's got a big credit book, so you have credit risk here, and not that we have big concerns on credit right now, but that's one of the reasons why it trades so cheap relative to other things out there. Macy's is currently benefiting with its Bloomingdale's banner from the Saks bankruptcy, but Saks going bankrupt, look, Saks is a much higher quality asset, and the fact that it could go under is just proof that, Macy's and Dillard's are in trouble. So we don't like Macy's. This doesn't have signal strength, but I think it's like on the line. Keith, you could chime in there and let me know. But I think it's close.
Both Macy's and Kohl's broke trend on Friday. So those will be on the signal strength short list. as of now, essentially. So I'll put Coles in the top 5 most actionable because I like zeros. And they're, all three of them look like shit. That's a very technical term for those of you that are astrologers or 50-day moving average chart experts. That's how we roll here. Anything else?
Yeah, just another quickie, big picture one is we went long housing retail. So Home Depot, HD, Our House, ARHS, that's a furniture retailer. Floor and Decor we flipped on. So that had been an active short for us from 115 bucks down to 70. We flipped on that one, put it on our long bias list, and then Lowe's, which had been an active short for us, we put that on our long bias list as well. So this is just due to, you know, our view that overall the housing environment is going to stop going down, and is going to inflect. I think the thing I like the most is that the company has set expectations, that the companies, all of them, have set expectations that this is going to be a very bad year. So relative to expectations, I think all companies come in better. On an absolute basis, which matters more, Pod 1 should accelerate across the board for all these companies, maybe only by a couple of hundred basis points, but that's all we really need to get these stocks going. So we added to our housing exposure with RH being number one, which, you know, I'm kind of waffling on that one, not from a long-term standpoint, but from like a near-term standpoint, because it lost signal strength. Though I think RH, when it does report reality, I think it's going to look actually quite good. But his signal does not agree with that one. I think Home Depot is the one where his signal is probably closest to agreeing with us long side. But that's where we stand.
Yep, that's right. So you can have an analyst that's positive on a stock, but the signal's bearish, okay? If you've never heard of that type of objectivity, again, I'm sending you right back for the third time already here. CNBC, baby. All right. I'm giving them a lot of commercials here this morning. They don't pay me. They blackballed us, right? I would too. We're just like, you know, talk about everything that AI is disrupting, but nobody on financial TV or on Wall Street suggests that what's really being disrupted is both of them. I mean, that's pretty clear, I think, to the people. All right. Thanks, Brian. Appreciate it. Tom, yeah?
Yeah, I'm here, Keith. Can you hear me okay?
Yep.
So last week we just there was this genomics and tools conference, AGBT. 10x was there, and I was hunting around for, geez, why is the stock working so well? And there was on the margin a pretty positive development with them and Roche launching essentially a very low cost, high throughput sequencing machine coming this summer. So it's not going to be something that's going to affect things in the shorter term. But this low cost sequencing essentially is going to lower the costs for a lot of these spatial genomic type experiments. And so the announcement was that they were, you know, sort of plugging in and working together between 10x and Roche, which, you know, obviously is a positive. Not so much that you're going to, you know, have a call point or, you know, a collaboration in that way. But if I'm a researcher and I've got X dollars in the bank from a grant, the scope of my experiment can grow dramatically if I'm lowering the cost to getting more data, right? And if you're in the more data you get, the more robust the result, the more likely you get published, and the more likely you are to get another grant. So the way this cycle works is just as you lower the marginal cost to acquire information, the amount you'll spend, like the unit value of that dollar, goes up dramatically, right? So you're gonna, at lower price points, essentially the consumable pull through for 10x is going to be higher, right? Because if I can get, you know, X amount more information to process, the value of the experiment goes way up. And so that's what's been happening. They've been cutting price and getting consumable pull through. This is a playbook that Illumina used really effectively for years. And now, for spatial, I think that if this all sounds really complicated and sciencey, it is, except it just boils down to, if you're in a race and, my shovels more dirt than yours, I'm going to win, right? So I'm going to have more information, a higher density of essentially insights and value added, and this will go on for years, right? Like the magnitude of this problem that these guys are trying to solve, women and male scientists out there trying to get this done. It's going to be, it's a long road, and it's going to be a lot of money spent on this, and a lot of that's going to flow through 10x's P&L. So that was the one thing. And then on the position monitor, I moved a couple of things around. Fernando and I have been going through Novo. So the theme is that GLP-1, oral GLP-1, cheap GLP-1 is going to transform the U.S. medical economy. And so the first stop
I've never heard that one before.
Yeah, well, I mean, it wasn't. Well, look at where the stock has landed, though.
I'm stock's a different subject matter, but
the issue though has been that they've sort of they've cut the price so dramatically, and we're still well ahead of where the street is on sort of where this thing ends up 2 and 3 and 4 years from now. The second step is, okay, somebody who has a high BMI who moves into a lower body mass index, they spend less. So we're quantifying all that, and we've got a pretty sweet little adoption curve model that Fernando's built out. The problem with Novo is that they've cut price so much, it's hard to model the upside as dramatically as we did. So I just pushed it to the bench. It's been a mistake to get ahead of the research there. And then the other two I moved over to the long bench were LabCorp and AMN. And that's it.
Yeah, the reason why I say that, and I challenge our own portfolio managers at Ham to think about this too. Challenge everybody. If you don't like being challenged every morning, you're not like me. I mean, why would I get up in the morning if I didn't want to be challenged? I want to beat the fucking world every morning. That's what we want to do. Hey, come on, let's go. Stop being soft, right? Like, let's go. So there's this thing called the machine, right? And the machine, if it finds something identifiably that every smart person knows, like everybody knows that everybody knows. Like what Tom said on GLP-1, my comment was what everybody thinks they know, right? I mean, so let's just say that it actually ends up being true. Let's say that what Tom thinks is true. But the problem is that everybody else thinks it's going to be true. So they all have the same position. So the big problem with that is that when all their other positions are going down, like their Bag 7 stocks, that they have to sell their whole book. So they have to sell what they think is going to be true, but it's not true today. Yeah, there's this thing called timing in markets, right? So again, if you are long of something that everyone is long of, you can be right. In your own mind, that's a very dangerous place to be, by the way. I mean, but actually right. Like by you could tell me with inside information, like a lot of people trade on these days and get away with it. You could tell me, well, this is what Nova is going to report on this quarter. Well, there are all these days in between this and that. And imagine that everyone that thinks that they know that, Tom, about Novo has those numbers or thinks that those numbers are going to be true. And every day the stock goes down until they report that, then it goes up. I mean, that can happen, right? I mean, again, crowding is a huge problem right now in this market. Huge, right? Because the machine's figuring out what is true faster, and it's also figuring out who's, offside together faster. These are different things. Positioning versus idea. Stock versus idea. All right, let's just trying to level everyone up here. You get the new people on the call. Love it. All right, TXG, Tom, great job with that stock. He was short it, then he was long it. Now he's really long it. TXG, we'll put that in the top 5 most actual. Big breakout on Friday. So there's a bunch of stocks that are going up, despite war. I mean, that's the whole point. There's no war at TXG. All right, managing Carnival Cruise, that's different than TXG. All right, we have 3 most actionable meaning that it's something to think about that we've already positioned on, or something that we're incrementally trying to help you execute on, or how to think about that in the entirety of the process. Emily.
Good morning, Keith. I'm going to use my time to plug my call on Wednesday. Andrew Friedman is going to be joining me. And we're going to be talking about policy as it relates to artificial intelligence. And we're going to be doing that. And the reason everybody should care is that the debates that are raging now centered over the Department of Defense contract with Anthropic and now OpenAI this is an intensely political situation, which means that the actors that everybody presumes are acting rationally are not acting rationally. That's unfortunately one of the side effects or I should say, adverse effects of politics. So we're gonna kind of walk everybody through that. And since it's free week, I think I'm gonna turn this over to the media team and open it up for everybody, because we're gonna take a very differentiated look at what the fallout is from the Department of War Anthropic situation, and where a lot of this politics is going. Because after that big dust up last week, the policy is going to change. It is changing, and that's going to make some people kind of uncomfortable. So that is Wednesday at 10 a.m.
Nice. Free week. Please don't be upset if you pay for this. I mean, come on. I mean, when I was consider somebody else's life or path, or empathize with learning that the world isn't just what you think it feels like. Okay, the word "feels" not one of my faves when it comes to investing. In fact, it's my favorite to fade. But I had like 2 channels growing up, 2. So when they put the thing for free on, like HBO for like a week, that was like the best week of my life. Okay, like this for market people. This will change your life. First of all, if you actually pay attention and know the difference. And we want more people in our community. We want as many people underneath the tent that lives and thrives under the rules of transparency and accountability, a meritocracy. Again, doing it legally, right? These kinds of things. It's still the American way, no matter what anybody tells me. When people, I get hockey parents or otherwise that try to behave otherwise, I'm like, fuck off. Go back. Go find another team that behaves that way. This isn't some socialist team. All right. It's America. It's America, Steiner.
Hey, Keith. We got no Josh today. He's actually traveling right now.
There you are.
Well, I know you've talked about our TAM at Hedgeye and how. Sorry, go ahead.
No. Go ahead. It's always like a little. It's like trying to tee Steiner up, and then he's not there.
Sorry to disappoint a little bit, but no, I mean, I know we've talked about our TAM at Hedgeye quite a lot, and how hopefully that's continuing to grow, continuing to widen. So hopefully a week like this where we are giving out our content, people enjoy it and they want to join the team for a while.
Attaboy. There you go, Matt. And they've turned the corner right away.
Yeah, but obviously a lot going on over the weekend from a macro perspective, but wanted to briefly just hit on some of the changes that we made on our position monitor, or just kind of mention, last night we made some moves and wanted to flag that we actually have 0 bullish trends across the 26 names that we cover in the financial sector. That's
a record.
Yeah,
it's a record since the financial crisis, because Steiner didn't work with me during calling the financial crash and crisis. So we're back to our old record when I didn't have teammates in the financials.
Yeah. And, as most of you guys know, as most of our subscribers know, we've, largely changed our position monitor framework over the last year. And, one of the inputs in our model is the signal itself. So, you can kind of tell that our positioning has sort of skewed towards where the signal is. And, it's pretty reflective of our positioning. We have everything is either bearish or neutral. And, we have 17 current best idea shorts and we have 1 best idea long, that best idea long being Citizens, which, has been bullish trend and has been a pretty strong long for us. It remains to be our, preferred proxy for the regional banking space. But, our position monitor is very clearly bearish, and it's reflective of our macro positions as well, getting out of the KRE, which is the regional banking index. And then obviously being short XLF for, I think, a week and a half by this point. We published this morning we published our performance for February, which is kind of part of our new process and initiative, publishing our monthly performance. And It's been pretty strong on the short side. So it's kind of what we're doing is providing alpha what we're doing from a positioning standpoint is been strong, and we've had a lot of really good trades on the short side and pretty consistent returns as well. So I just wanted to flag that note went out for our financial subscribers this morning. If you want to take a look at that.
I would say for a former college golfer who Coop is, you would say that no longs after and into a week like that would be no double bogeys.
Bogey free is good.
Eliminate those on your scorecard. You're going to start to understand the Hedgeye risk management process. Oh, no, I live in a van down by the river. I want to grip it and rip it. I want to take out the driver every time. I'm going to buy me some crypto. Like, seriously, just think about the things you've done if you're new here. Risk management's a thing. Insurance on your home's a thing. Health insurance is a thing. You've worked your whole life to earn this capital. Treat it seriously. I'm being serious. Thank you. Appreciate that. 0 longs. Wow. Back to 08. We did call the stock market crash of 08. That's how Hedgeye came to be. By the way, that's why we're blackballed by so many of these political edifices that have really infiltrated our financial mainstream news, so to speak, that we like to fade. All right, thanks, Ben Skyver. Yeah.
And when I get a bogey on my scorecard, I'm thrilled. That's the best thing that can happen to me. That's a really, really good hole. We have, I guess, we will also be putting out our performance note today, and it is less good than it was last month, but that's par for the course, and that not to do that again. But we have obviously a Middle East war, oil up, pre-market trade. So we're seeing things like the fertilizers rally. That's just how it's going to be. Airlines down, defense names up, gold names up. There isn't a ton of specific new news. What we'll see in sort of the shipping space is a lot of shipping cost rise. It tends to be commodity bullish, and structurally so. The longer it happens, the more relevant it will be. In our process, we have we're going to do the HVAC names. We're going to pivot a little bit our deck. We're going to do today on building products more to the HVAC space, where we have more signal strength, Lennox, Train. All these names are Carrier. Super interesting. A lot of interest on the street. You mentioned crowding earlier. I think in some sense crowding is like the setup. It's the exit that's the painful part. And I think these have been a name where they are definitely not crowded, but there is a crowd interested in joining the party. So we're starting to get involved in that. I think Signal is certainly helpful there, and we can get the fundamental work in place very quickly, and present that deck tomorrow. And then I'm in marketing on Wednesday and Thursday this week. So busy day, but no particularly specific news. I mean, there's the China 5-year plan that's going to be theoretically coming out. A lot of commodity stuff in there today, but nothing specific I would flag.
Was there anything specific on Lennox on Friday other than us incrementally liking it and adding it to some lists?
But that's interesting. I just assumed the 4% move was us.
Yeah, I think so. Yeah, don't. I'm not going to tell you what our assets under management are already at hand, but let's just say they're consequential, and they're going to be more and more consequential. So when we add stuff, there are real buyers that we know, right? And our community, by the way, is much, much, much larger than that. So when you have trillions under management, so when you get a new something like Jay has been white hot, notwithstanding some corrections that he alluded to in the industrials in the last 2 weeks really. Week, actually. They just finally stopped going vertical. When we add something new, I can't tell you how many hedge funds are paying attention incrementally and buying and covering and, again, acting incrementally. But there's a lot of long onlys, there's sovereign funds, et cetera. So understand the power of the platform. If Yo-Yo Steve Leisman tells you to go buy Russia or something, nobody cares, right? I don't know one hedge fund manager who would go buy what Jim Cramer tells him to buy. Not one, right? So if Jay Van Sciver says incrementally I'm bullish on TT or LII, which is Lennox, let's put that in the top 5 just as a good example. Who's bullish on HVAC stocks? I mean, that's not sexy. That's not laser eyes, right? That's not like some guy pitching you like BMNR, which we're short, for example, or they're, it's going to be huge. Yeah, it's like, no, it's HVAC, right? Like last I checked, most people would prefer to stay in their homes today than live in Dubai. And you need HVAC. Wow, what a thought that is, huh? Was that part of Jay's thesis?
You also need HVAC in the Middle East, and it's quite warm.
Yes.
And I'd say one difference between what we do and what Kramer does is that we actually do a lot of work on it. We tell you what we actually think. When we get it wrong, it's because we did our job wrong or something went wrong. It's not because we had a bias or some other, sometimes the job is just really hard. And that's a real reason to pay attention, I think.
Indeed. All right, Fernando, your world is got some pin action in it. Fernando does energy stocks, by the way.
Yeah, certainly has. And us, along with following the signal, we moved all of the oil exposed names to the long side. We added some of the oil E&Ps to best idea longs I was going to talk about. Matador and Diamondback, tickers MTDR and FANG, FANG, respectively. Both of them reported last week. Diamondback actually had a write-down that they took, a fairly large write-down related to their reserves, which again, it's really more of a technical aspect, which was because oil prices were lower in 2025 than when they made the acquisition. And obviously now that's in the back view mirror, and now with Iran having a disruption, which is already a disruption. It's not going to be a disruption. The traffic through the Strait of Hormuz has already been disrupted. That's bullish for oil prices. Again, the signal has sniffed that out. It's been bullish on oil for a couple weeks now. And the U.S. E&Ps tend to benefit more than the diversified integrated and certainly other players that are abroad. About 30% of the world's oil production flows through the Strait of Hormuz. Again, we don't expect it to be fully closed, but it is disrupted. And the U.S. is in a unique position where CapEx had been falling significantly. So you can't turn that around very quickly, but you can now potentially add CapEx to get production up again in the next 3 to 6 months and see a supply response if needed, if this disruption lasts longer. But if it doesn't, then because these are free cash flow players that are already generating in the high single digits, low double digits in free cash flow yields, you take their main commodity price and you raise it 10 to 12%, they're gonna do really well. We still tend to like the names that have more inventory. Again, this is so far a temporary disruption in supply. So that's why we like names like Diamondback and Matador over someone like Chord Energy, for example, ticker CHRD. Chord has less inventory. They're still going to benefit, but they have less inventory and less leverage. So in this immediate shock, they do less well than a Matador or a Diamondback.
Yeah, so Matador and Chord, okay? Like here's a good example of what we call bearish to bullish phase transitions at Hedgeye, okay? Long-standing bears that Fernando had a short. Okay, so I don't need to pull up the chart to tell you that these were terrible stocks. And when terrible stocks become less terrible and then actually become less terrible and good breakout stocks, those are called phase transitions. If you don't know what a phase transition is, take a pot of water and turn on the element. Okay, so it goes from one state to the next state, bearish to bullish. And that's what Matador is. And in many cases, when you get a huge top-down macro breakout, and again, for people that tell you that they can't time markets, first of all, believe them because they don't have a process for that. Secondly, ask us. And thirdly, when you see something big, whether it be a breakout in gold last year, at this time last year, it was more or less February. Now it's, of course, March, or it's oil now. What tends to happen is that the shit or the crap stocks that were the worst go up the most. Okay.
It's just like there's a plug in the toilet. The shit rises right up to, faster. And you're like, oh, it's shit. It's like everybody knows that. But you just plug the bear, right? It's now a bull. The water's flowing. The flows are buying it, right? And the shit is rising. So I can't think of a shittier stock than Matador. Like, that's why I want to make it like one of the first things you buy in a pullback, and I did in real-time alerts, I think. But MTDR is Mother Terry Dog Robert. Dog do, but does that accurately depict what you were hoping for this morning?
Yeah, it's essentially, I said the same thing on the utility side of the equation. You don't have anything greater than when an asset that's worth zero goes to whatever price that's positive, right? And that's exactly what's happening. It goes from being on the marginal side of the equation to being worth something. That's an infinite return. And when you add leverage to that, which Matador has in spades, because some acquisitions, it's an exponential return.
Yeah, so for all of you crypto lovers out there who are just tolerating us this morning, because this is really going to challenge your biases, your feelings. If you want to make a lot of money in things, buy cyclicals before they start to go up after going down, or buy them as they're going up. I mean, they're going up way more. Gold miners have been going up way more than your crypto crap. Keeping with that crap theme. Anything else?
Just quickly, there seems like one of the merchant or formally regulated players, AES, ticker AES, is going to get taken out after all. It's a combination of GIP and EQT that are going to take it out. I think just to highlight that we're still in the early innings of this surge for power, pun intended, where everyone's going to be looking for to acquire more generation in order to benefit from the AI trade.
Okay.
Also, a stock
Good.
that was crap before.
Thank you.
And rose a lot.
Yeah. See, in Ireland, we like to say, if it ain't Irish, it's crap, right? I love this game. Freebird.
Morning.
The bird is the word. Are you feeling better?
Yeah. No, last week was tough, but feeling better this week. It's a little lingering, but still a lot better than it was. Just
For those of you that are, because it's free today, I call him the free bird. Everybody at the firm calls him the bird. His name is Andrew Friedman, though. If you want to look him up on, he's very prolific on the Twitter, and that's what I have to say about that. And yes, I'm driving. If you're paying attention here, so if you have the feedback that many have before that I should be careful, thank you. I appreciate you, I think, is what your generation would say, Friedman.
Yeah, that's probably right. I appreciate you. That's a good one. So just I mean, there's so much going on, but I just actually want to flag just Take-Two for a second. It's obviously doesn't have signal strength, but it's one where we think we're gonna have a catalyst coming up here with pre-sales of GTA 6 going live in the middle of the year. So they committed to a marketing campaign to start around June, which is also in and around the World Cup. So they're probably going to capitalize on that buzz. GTA 6 has obviously been, a huge part of the thesis in terms of our expectation for a big estimate revision and a pod 1 acceleration. So just wanted to kind of flag that. It is March, so there's a lot of, market time and space in between now and June. But I think for folks that may be expecting a catalyst to be around the actual official launch in November, the reality is that pre-sale numbers are going to come in and it's going to drive cash flow in the short term. And it's something that we're going to have to, be watching very closely because we do think it's going to be, incredibly positive and for units to come in above consensus, and also just longer term transformational to the margin structure of the company. So just wanted to, flag that one to the extent that it does start to get signal strength and start acting a little bit better here in the next couple months. We do have a catalyst, and that could be the market sniffing that out as well. So we'd look for that confirmation. Otherwise, I'll just leave it there.
Yeah, it's back to bullish trend. You saw that this morning, right?
I saw it last night, but I'll look again.
Yeah, it was on signal strength longs is what you saw last night. But Netflix, for those of you that don't want to spend as much as others, that's fine. Wouldn't work in my household because John McCullough, if I showed up at the work site with just a hammer and a tool belt, he'd tell me to go home. But if you want all the tools, wrist ranges is one of the most important ones. In that, I produce, or we generate the signal bearish trade, or sorry, bearish or bullish trend for everything big and macro that ticks, but also big names like Netflix, the Bag 7 stocks, Oracle, etc. So it's Netflix has gone from bearish trend, which the signal nailed, back to bullish trend. Ironically enough, I mean, one of our, I guess Peeler would have heard this call, but one of the biggest hedge funds on the planet said to me, he goes, against this Bag 7, what would, like, if you had to buy one, what would you buy? He said, and I'm like, well, I wouldn't buy any because at that time they were all bearish trend. And he goes, I know, but if you had to buy one, which one could go up the most? And I said, Netflix. What a call! Yeah. Because it was the most. That was the thing, Friedman. So that was the easiest one to call anyway.
Yeah, sometimes if they go down the most, then they can go up the most in the shorter time, especially positionings off size. And yeah, actually,
well,
yeah, I don't know how I missed that actually.
Well, it's just math. When everything's going, it's just math. When everything's going down, the thing that's signaling the deeply most oversold is the one that bounces the most. Okay, and in this case, it didn't just bounce. It had a catalyst that obviously we had no edge on, or we'd be in jail. But it's back to bullish trend. All right, thanks, man. Man, my phone just blew up here. Felix?
Okay, February was a much better month for our longs and shorts than January, but we're looking forward to a new month with March. A few things, we're waiting for the release of Apple's new products this morning. Tim Cook is hyping it up, but this is a critical moment. I'm waiting to see a lot of new products coming out, particularly from the PC side. And this is it's going to be a multi-day release, beginning with today. So keep an eye on Apple. It's very important. I also want to mention OpenAI. Finally, there's some obstacles in their financing. They didn't get the $850 billion that was rumored in the private markets, although it's not fully done yet. Altman is still hopeful that more investors will come online, but at the moment, the pre-money valuation came in at only $730 billion. There was a new investor in OpenAI with AWS putting in $50 billion, but $35 billion of their investment is dependent on certain undisclosed conditions, probably including what people think an OpenAI IPO. So that's new. That's not great in terms of, Sam getting the money without potential conditions he has to meet. The other thing that was new from this funding round was NVIDIA. So NVIDIA, their investment is $30 billion. Of course, that's much less than the $100 billion that folks were clamoring on last October, but it's still $30 billion. But the details is what matters. That $30 billion is only 3 gigawatts of dedicated inference capacity, 2 gigawatts of training on VR. So that's half of what NVIDIA wanted last fall, and it's also a little bit smaller than what OpenAI did with AMD. So Jensen's probably not happy with this deal here, but it's still something rather than nothing. And OpenAI, this is a cash burning machine. I think with this new development in their new financing, as long as you have financing issues, what usually happens is they're gonna need more cash soon, which most likely indicates IPO. So everything goes in that direction at the moment. But I wanted to mention that because this is the first sort of hiccup that I've seen in financing since really this AI trace started 2 years ago. 2.5 years ago. So just wanted to mention that. That's it.
And his favorite tech financing short is CoreWeave, CRWV, which we reviewed on Friday, right, Felix? You don't need to do it again. And it's a fundamental shot in rate of change terms that could explain part of why NVIDIA broke trend on Friday. I mean, that's one of the most epic turntails on a 2-day basis in and out of a catalyst that everybody evidently was long that I've seen. I mean, or that the market's ever seen, given like just the market cap associated with the move. But it's obviously got huge impact. I'm short XLK, 20% of that's NVIDIA, so I'm good with it. But my call would be that most NVIDIA bulls, including you, are going to be late to going bearish. But we'll see. I'll talk to you about that later.
Remember, yeah, I missed you on Friday. I went through a lot of numbers for CoreWeave.
Yeah.
I was, but I won't go through that again. I usually yell numbers if there's something really big, but that was a big call by us. So.
Well, I don't know how many times I've yelled at you, but I'll be yelling if I don't see 60% plus on that bullish active list.
I know it's tough in my space at the moment, but yeah, we're adjusting. It's very difficult.
In a sector that goes straight down, the best way to not get smoked is to not have active longs. You're allowed to take them off. You're allowed to put them on the bench. The main problem analysts have is a human one, is that they don't want to admit being wrong because the market's calling them wrong because they're hoping for a bounce or whatever, but they're all sellers on bounces anyway. So that's, again, who gets you out? The signal gets you out. NVIDIA, we got out of that. That's now 2 days old, market days old. All right. Thank you. Glenn, yeah?
Good morning. Couple of quick things. Number one is the Live Nation Ticketmaster antitrust trial begins today in New York. It's jury selection today. Arguments open up tomorrow. We'll have a lot of witnesses in this case. The timing of this thing is probably maybe early May. You could get a jury decision. At this point, I think the speculation is that, I think more likely than not, the jury's probably going to rule against them. We'll see how the trial goes. But again, this is a situation where they merged and there's been, evidence of retaliation against venues that don't use Ticketmaster. There's a history here. And I think all that could come into play when we get to the remedies part of this trial. And of course, what the government wants is a breakup. There's been no settlement yet with the Justice Department. There's 40 states suing as well. And again, it's a jury trial. So this is going to be a big pressure point. Again, the body language of Live Nation is to try to get out of this trial, settling, trying to delay the trial with appellate proceedings, et cetera. Hasn't been able to do it. So it's D-Day for Live Nation beginning today. And I think, this is something to be very concerned about in terms of the structure of the company going forward. One other thing is the Supreme Court should let us know today on whether they're taking a case that would determine copyrightability of, intellectual property protection for AI-generated content. If you think about all these concerns in, Hollywood and whether studios will resort to AI to make their scripts or to, make their films, and that somehow this will supplant the need for the creators in the creator economy, it's a big case because if you can't copyright it or protect it, then who's going to invest in it and who's going to distribute it? So I think it's potentially, huge implications for the entire, Hollywood filmmaking, everything, every aspect of media, potentially. If they don't take this case, then it's only because they want some other appellate court cases to come down before they take this case. But it's a huge case for determining the intellectual property protection for AI-generated content. So you can believe that all the studios and everyone who works in Hollywood will be watching this one very closely. So that's it for me.
Well, I run a content company. I'm watching too. I don't have to live there. I live in Stamford, Connecticut. Office does. JT?
Yeah, Keith, kind of quite a busy weekend here. Never a dull moment here in DC. So we've got, first and foremost, we are going to have two flash calls. We're going to have a flash call today at 9:45 with McCausland, trying to talk about next steps, which I think is pretty unclear right now, but he's going to try to paint a more focused picture for us. Secondly, Fernando and I are going to hop on at some point tomorrow morning with Scott Smithson and talk about the energy sector and geopolitics, and Scott has a background in Iran policy, so that should be interesting as well. But just trying to unwrap what happened over the weekend. Again, the next question I think everyone's asking is who's next and how long is this going to take? And I think it's somewhat indefinite. According to Trump, he's preparing us for the next 3 to 4 weeks. There is no apparent successor to Khamenei, of course, who was taken out. There's a choice between the hardliners. There are some moderates or pragmatists in there, and then there's a transitional figure that's being talked about. I think there are many, many more hardliners than there are moderates. One of the hardliners, I believe, is Khamenei's son, who is out there. So a lot of uncertainty as to who is next from a leadership standpoint. One of the things I had picked up over the weekend through a source was that Operation Epic Fury was not going to stop until they rooted out all of the leadership, and it goes pretty deep, Keith. So that's going to be, I think, what takes a little longer to figure out who the good players are and who the bad players are from their standpoint. There is an assembly, I believe, of experts called the clerics, somewhere between 85 to 90 strong, Keith, and it looks as if they are poised to choose the next successor. Still unclear how all this works. It hasn't been done in 35 to 40 years when Khamenei was chosen last. And then finally, we're starting to see, I talked to another source right before the call, Keith, and we're starting to see some acts of desperation by the Iranians. And just how long can their munitions last? Remember, they have been supplying the Russians with missiles, ballistic missiles, et cetera, over the past 2 to 3 to 4 years here. So how long can they continue to retaliate? And of course, we still have the Gulf Coast states that are out there that are probably going to engage sooner or later. It's kind of interesting that they're alienating almost every Arab state out there at this juncture, with the exception of Qatar, which is something we're talking about a little later this morning. So the last part of this, Keith, is the War Powers Act on Capitol Hill, and whether or not Congress is going to try to, again, you're supposed to declare an act of war to Congress, and Congress has been trying to, in very small terms, get back some of their influence here. I think that all the votes are going to fall short in both the House and Senate. And they'll be irrelevant at this point because it's already taken place. So this is kind of a look back. I don't know why they need to spend time. I get that other campaigns need to be undertaken over the next couple of years, but this one is history. This one is kind of hard to claw back, if you will. So we'll wait and see what happens on that front, but I don't believe that'll have an impact on Trump's mentality or thinking going forward. 9:45. Yeah. Sorry, that's a lot.
Well, no, do you think there's a lot that happened this weekend? I think so. Like McCausland, he's talking about Colonel McCausland. For those of you that are new to Hedgeye, he's our in-house expert, so that JT and I don't have to have an opinion on this. My opinion will never be a political one. Again, it will rarely suffice for those that wake up with political only feelings. One example this morning. And I knew like everyone would have an opinion when the futures opened last night, JT. You had, oil up 13% and, gold going vertical, all the moves that were happening, right? So you get all these people tweeting with no positions in any of the above. And then you get up this morning and it's crickets, right? Like, and then you'll see from MSM, oh, American planes are shot down, implying that there are a bunch of dead American pilots. And then, you sit there and you work for another 45 minutes. It's like, oh, that's not the case. The planes are down, but they're alive. It's just like, but that's what certain people want and need to believe. We're not going to do that. All right. We're in the middle of the fourth turning. We've never been more polarized as a country. And you're listening to a Canadian say that. We've never been more polarized, never been more biased. The media has never been more of a danger to your life, mainstream media being. So the best we can do is analyze it with all the information we have. and come up with the best way to save and make money. Okay. I'm not tasked with saving everybody's life, but if I can preserve and protect their hard-earned capital, that's a start. Okay. This is not some bullshit thing that you can go, if you want to go watch bullshit, go turn on any other channel. We appreciate you spending the last hour with us. That was for those of you that are watching this for free this morning. I'll be on the macro show in 10 minutes.